Hi, it's Friday, May 6th, 2016. So it's the first Friday of the month, and usually that means non-farm payrolls in the US or the jobs data. And yeah, it was a disappointing number for the US economy. Um, Jobs rose by 100, non-farm payrolls rose by 160,000. It was expected to be above 200,000, I think 205,000. Unemployment rate, which is a totally fictitious number, stayed at 5%. The real unemployment is in double digits. The other thing that's pretty bad for the economy, and it shows that the U.S. economy, not only U.S. but the Western world economies are haven't recovered from the collapse of '08. Prime age workers, this is a story from Zero Hedge, prime age workers tumble by 280,000. Workers 55 and over surged to a new all-time high. But, more and more, workers out of the workforce. Another story on Zero Hedge, 562,000 workers drop out of the labor force as participation rate resumes drop. So we're down to 62.8%. That means that out of 100 people that could work, only 62.8 people are working. And yeah, I mean, it's a little bit like a Groundhog Day. For the last 4 or 5 years, we've heard, all the Wall Street and City of London investment banks saying, oh, the Fed and the Bank of England are going to start hiking rates next spring. Economies are going to pick up. And we've been listening for that for 4 or 5 years now, and it never happens. And every year, Groundhog Day, they come back. It's almost like they're replaying the script. I remember the Economist magazine, the main issue in the beginning of 2015, which came out around Christmas 2014, there was a big article saying, oh yeah, the Fed and the Bank of England, those two countries are recovering really well. They're going to start normalizing and raising rates in 2015. And all we got was a 25 basis points or a 0.25% hike in December 2015 from the Fed. Bank of England didn't even, touch rates. And now with this, very weak number, jobs number today for the month of April, all these stories are coming out. Now it says, here in Zero Hedge's June rate hike odds collapse to record lows. Market prices in note hikes through February 2017. I would say the markets, in February 2017, they're gonna say, oh, markets price rate hikes for 2018. It keeps. When are people gonna realize that the Fed cannot stop printing? It's print or die. They had their chance, the Fed, in 2007 and 8. They had, and the politicians who bailed out the system, they had the chance to let the system, cleanse. You had to let the banks collapse. You had to let the system implode. And it sounds bad, but we'd be recovering by now. Maybe JP Morgan, Goldman Sachs, Morgan Stanley, Barclays, all those banks wouldn't exist. But would that have been a big loss to the world? I don't think so. It would, we would be doing a lot better now as an economy in the U.S., in the U.K., in Europe. But, the Keynesian philosophy of bailing things out, of not letting the market, do its thing, it's the antithesis to the Austrian school where, the Austrians say that, the less government, the better, and let the business cycle work its way through, and we haven't done it. And the Fed, they've been hoping that throwing, money printed out of thin air into an economy uh, it will help it. What it won't help the patient. It's like giving heroin to a heroin addict. He's just gonna not improve. The economy needed cold turkey in 2008, and it would have been really hard, but the Fed really can't stop the loose monetary policy. It's print or die, and I don't think things are going to improve. They should have let it collapse, in 2007, 2008, and they didn't. And now, they've created an even bigger bubble. They've thrown trillions and trillions of dollars into the system. It hasn't trickled down anywhere. It's just stayed, it's just pumped up asset prices, which benefit, the very, very rich. And that's about it. So the Fed has, they've made a huge mistake. And the whole world's going to pay. We would have paid for it already in 2008, but now the price is going to be even bigger. So yeah, that's my that unfortunately it's print or die at the moment right now, and they should have let the patient die in 2008, but they didn't. And so they're keeping a zombie alive. Eventually the zombie will die. So in terms of the markets, the Dow is now unchanged. It was down like over 100 points earlier. The S&P is down 3 points. But these markets are all, manipulated, even though I think they won't be able to keep the stock market higher. Gold's doing well. We're at 1292. The high was 1295. Silver 1755. So that's pretty good. The dollar, I made a video a few days ago when the dollar was really under pressure, breaking through that 92.60 level in the dollar index. But since then, we've seen a bit of a short covering in the dollar. I think the dollar is still, a sell, or the dollar index. Today, it's back up above 93. It's 93.69, down slightly. But I think, the direction in the dollar is lower. There's no chance in hell that the Fed, can hike rates and make things better again. Goldman Sachs is saying now that they're going to hike in September. Goldman Sachs, they shouldn't even be, in business. They, if the U.S. Treasury hadn't bailed out AIG in 2008, Goldman Sachs would have gone under. So yeah, print or die, Janet. Take care. Bye.